Impact investing at its core is microfinance. You cannot have more impact than with microfinance.
Welcome to the Swisspreneur Show, a podcast about startup stories and learnings from experienced entrepreneurs. Here's your host, Sylvan.
Roger, a very well welcome to the Swisspreneur Show. It's a pleasure to have you here today.
Thanks for having me.
You are a board member and the managing partner at Enabling Qapital, an impact investment and microfinance advisory company based here in Zurich. Before we talk about your journey, we want to learn more about your personal background. You actually studied business in Zurich. You also started working at Julius Baer's asset management team right during the financial crisis. And there you had a real aha moment when you were talking to a colleague about the Lehman Brothers bankruptcy. What happened?
Yeah, that was actually a changing moment for me, because I was having lunch with a colleague and he told me that everything will go down now and we will lose our jobs and we cannot finance our family anymore. And I thought to myself, that's not how I want to end up. So I always wanted to have some side business that I'm not relying on other people's decision. So I want to be self-independent, and that's why I also started other business on the side.
One of that businesses was organizing events. Mm-hmm. You know, where does that entrepreneurial drive come from? Did you already have that before that aha moment, or was that really the trigger point that then pushed you towards entrepreneurship on the side?
So actually there are two answers to that. So on the one hand, we have big and successful entrepreneurs in our family. One is my grandmother. Like 60 years ago, her husband died, my grandfather, at a car accident when she was 37. So She became a widow with 3 kids, and she had not only to take care of the kids, but also to the company. So she had more than 100 employees from one day to another. She had to take care of 100 employees and her family. And she made that quite successful. The company still exists and doing very, very, very well. So I always had that entrepreneurial spirit in our family, thanks to my grandmother. And to your question about the events, actually, I was approached. I never thought I want to become an entrepreneur. I just was approached by a friend and who had the idea to do an event, and I'm like, yeah, why not? Let's start doing events. And after a while, we organized more than 50 events a year, next to my normal job at Julius Baer Asset Management, where I flew all over the world, which was before the impact space. So.
How did you manage that? Because that's like one event per week, basically.
Yeah, exactly. So the thing is, I was never alone. So it was always a team approach, and once you get used to it, to spend time after your work to organize these events, but it might sound tougher than it was, because for me it was a hobby, so I never felt like it was a work. I would go out anyways, and now I went out to do party, and I earned money, and I could invite friends and colleagues for drinks for free, and so it was the best of both worlds, going out and earning money.
That's a pretty good combination, I guess.
That was good. Yeah.
Have you ever thought about doing the event business full time, or reducing your workload in the bank and doing putting more focus on the event business?
No, actually not. I always saw that as a side business, and I actually still do one event a month, actually, before coronavirus hit, which is Saturday afternoon party, sun up, but we still do. Cool. We are a group of 6 guys doing that, so it was quite successful. We have like 3,000 people per event once a month, usually in Kaufleuten or some off locations on the lake. So I still do that, but still nice. On the side. I couldn't live off from just from the events.
And economically speaking, what impact did the event business have on your personal finances? Because I can imagine basically working 2 jobs, that also has some positive financial impact on your bank account.
Yeah, absolutely it did, because usually you spend money when you go out, and sure. I didn't spend money. I earned money while going out. So I could save a lot of money back then, which is true because I didn't have high fixed costs. I didn't have family or anything, so I could save a lot of money, which I invested then in startups, real estate, which I think we talk about
Absolutely,
later.
Yeah.
And it still has a big impact, because imagine if we do the afternoon event and the club would be empty during that time. So we have quite good negotiation power to tell them, look, we fill the room for you at a time where usually nobody's coming. Right. And now the turnover is bigger in the afternoon than at the excellent evening party. So
crazy.
Yeah. Everything before Corona, by the way.
Of course, yeah. On a monthly basis, like how much additional francs did you make per month approximately? Just you personally?
Yeah, I mean, it was, I could say it was like 30-40% of what my annual salary was at the bank, which I did on the side as well.
Nice.
Yeah,
that's a good top up, like a nice bonus, right?
Absolutely, yeah.
And you also mentioned your family business that your grandma was leading. It's Divisa and Willisau. I think most of the people know it probably from the Troika vodka, for example, or other similar products. Was it ever an option that you considered to take over the family business, or why not?
Yes. I mean, when I was too young because my grandmother inherited the company to my uncle, which we were never in contact with him. So we didn't have a relationship with him. And he decided, because I think he knew he's not really the entrepreneur type, he decided to give it away to the CEO back then. So that was never really an option, which is actually a sad thing because it's a 100-year-old company. But he had other plans with that. And so...
Okay. But no regrets that you didn't take it over?
No, I think I made another journey, and I would have to live in Willisau. I prefer to, which is a bit on the land side. I prefer to live in Zurich, to be honest. And no, that was never an option. Yeah,
fair point. We will talk about the startup investing that you do in a minute or in a few minutes. But one thing you also mentioned was you got into real estate pretty early on. So how do you actually become an investor in the first place? How did real estate attract you as an investor to put your money there?
Yeah. Also, my grandmother always invested in like this typical real estate with 8-10 apartments in it. Yeah. So she did that since I was born. She always had these houses, and she wanted to give cheap housing to her employees. So it was nothing new for me. And my father was in the real estate business as well. And back when I started to invest, the prices were on another level, but also the mortgage rate, of course, was a bit higher. Yeah. But whenever I saved some money from my events or from my job, I invested that in real estate. I bought an apartment with my brother where I could live in, which was also cheaper, and I could save some money because I owned the apartment. True. And maybe one interesting story is about a big apartment house in Olten. People usually don't really like Olten, but if you think about Olten, it's half an hour away from Zurich, Basel, Bern, and Lucerne. So it's in the middle of basically everything in Switzerland. So there was this house which was on the market for quite some time, and I went to look at it, and then I found out it's a company, a government-backed company who runs it, who helps people with addiction problems. So they have a restaurant below where they give cheap food for them and give them a chance to interact with the employees of the aid organization. And also the office space was above that. Yeah. And I thought many investors didn't want to buy that because you don't want to have people with addiction problem in your houses. But it was a government-backed organization, excellently run, excellent employee. And I thought to myself, it's a beautiful house and it's backed with the government. So why not? So we bought it, and it was actually a super lucky punch because I go quite often to see how everything goes. And when we bought it, they wanted to have... They asked us if we would renovate the top floor and the roof because they need more office space. So for us, it was, again, a lucky punch. We said, yeah, of course, we renovate that for you. And so we rebuilt the whole top floor and rented out for them for 10 years plus. So it was actually a good timing. And I didn't have any issues with having people with addiction problems in the house. Actually, it closed the circle. My grandmother sold alcohol, and now I own a house which helps people with addiction problems. So, it's a bit.
I think it's a nice story, actually.
Yeah, it's actually an impact house. If you think so, I didn't buy it out of that reason, but it ended up being in that way.
No, this is actually a good segue to your career. So here it seems that you did with your investing, you also did good. So you had this impact where you say, hey, I'm not only investing to actually have probably a return on my money, but I also support something with a good cause. Did that also sort of trigger you to go further down that route, or what impact did that house have on you as a person?
Well, I think I gained confidence because it was quite an old house, and I gained confidence that it's not a big deal, or it doesn't have to be a big deal if you have a good architect and good handymans who help you rebuild that. But on the impact side, I used to work in the impact space before I bought that house. It was in 2016 I bought the house, and I'm working in the impact space since 2014.
Exactly.
Yeah.
And that's exactly what I want to talk about. 2014, you actually joined Blue Orchard. And there I actually just wonder, Blue Orchard is a pioneering impact investor that was actually founded in 2008. Why did you decide in the first place to join the impact investing space?
Yeah, so Blue Orchard was actually founded in 2002, back in the UN. It's the other fund we're managing now, which is in 2008, was founded in 2008. I like the idea, to be honest. I used to work with a colleague who is now our partner, one of the partners at Julius Baer, and he quit the job from the traditional asset manager and he went to a turnaround case that Blue Orchard was back then. And he told me I was the only one who said, that's cool what you're doing. Because I like the idea of the microfinance. I heard that back in my university, that idea with Yunus, who founded that, he made it popular, that idea. I thought that's a cool thing to work in that space. So he said, why don't you join me in that journey? So I went to work for Blue Orchard with him. And it was a turnaround case. It only lost money back then. Investors redeemed their money and the performance was really bad. So we really had to do groundwork and start from scratch with that fund. And it's not a 200 million fund, now it's a 2.5 billion fund, that microfinance fund, yeah.
But I mean, just, thinking about your position, you had your real estate investments, you were organizing cool events, you had probably a very well-paying job at Julius Baer. So why did you switch? Because you could just have said, hey, I continue what I'm doing, I'm probably making a good amount of money. Why did you decide to switch and actually go into the risk also to work at the turnaround case? Maybe
that was also because the first conversation I had at the lunch meeting with the other employee, that I think I was in a position to be a risk taker because I had financially, I was stable because of my real estate and my event business, so I didn't need that stable anymore, and I didn't grow as a person anymore. I did it for 5 years. I traveled all over the place. I knew what it was, and it would just be repeat 1 year after the other because it was basically the same. Yeah. And it's not the impact you can make as an employee is way smaller at the big traditional asset manager than if you are in a startup kind of environment, which Blue Orchard was back in 2014 where I joined.
Got it. And how did you then manage the turnaround? Like, what did you do to turn the company around that you didn't go bust?
Yeah. So there were actually two sides. One is you have to talk to investors that they're willing to invest in the fund. Then you have to disperse this money to microfinance institutions all over in the emerging markets. And the guy who was responsible for the disbursement of this loan is now a partner at the company we will talk later, which we founded last year. And a colleague of mine, we basically did groundwork. So we went out, we had to explain investors what is microfinance, why does it make sense, how much we charge interest rate, how much they can earn, why is it uncorrelated, and so on. So there was really, really groundwork. And nobody knew me back then in Switzerland because I was responsible for other markets. Nobody knew microfinance, and impact investing wasn't a topic at all. So we really started from scratch back then. But it was a good learning. It was tough at the beginning. It was tough, and now it's a different ball game now. But at the beginning, it was really tough.
You basically did like 3 challenges, right? Nobody knew you, so no reputation, difficult topic or difficult investment topic, and a turnaround case. Like that's 3 big challenges in just one company.
Yeah, correct. Yeah, well, it was a tough time, but I learned a lot. I mean, the learning curve was way steeper than if I would have stayed at Julius Baer, for sure. So there was. For me, to grow as a person, that was the best decision to do because it wasn't always just fun.
Did you also have, I know you said you have your investments, your event business that actually gave you the financial stability, but did you have to cut back on some corners in terms of spending or life quality or lifestyle that you had?
No, because I mean, I earned a decent salary. It was not like a investment banking salary, but it was decent, so I could. And my fixed costs were super low back then because again I didn't have a family, and so
that helps.
Yeah, that helps a lot. True.
And then you actually decided to start your own company, right? It's called Enabling Qapital. You run the EMF Microfinance Fund. And before we dig deeper into that topic, I want to know, you already mentioned a few times microcredits. Why are microcredits important in today's world?
Mm-hmm. Mm-hmm. So microcredit is actually nothing else than the small loan you give to the shopkeeper, to the farmer, to the market lady or person in the emerging market. So it can be $20, $30, $40. Mm-hmm. And already a small loan helps to help the employees in the emerging markets to become financially independent and to help to raise their living standard. So it's really a big impact you can make with small money. And that's impressive to see if you are on the ground and see what it really helps. This money, that's super fulfilling to see. But we're not giving anything for free. So whenever we give a loan, we want to have something in return. So it's important that you teach the investor, the micro entrepreneurs. You teach them, you know what a loan is. You know what it means to repay the loan. What is your business model? How you want to repay the loan? What you're doing if your business is not running that well. So it's really a huge process before you actually disperse these loans.
So the educational part there is equally as important as the actual loan itself. I think with every loan that you hand out, you also hand out entrepreneurial training. Can you talk a bit more about that and why that's an important side effect of your loan?
That's absolutely correct. So currently we have more than 100,000 entrepreneurs that we support with our fund, but we do it indirectly. So we are not going to the micro entrepreneur itself. We give loans to microfinance institutions in emerging markets, which you can think of as small banks, like Raiffeisen 100 years ago. Yeah. So these are the typical small banks who go then to the micro entrepreneur and give them the $20, $30, $40 loan. And before we disperse the loans to the microfinance institution, we do a due diligence with more than 100 checks. And a third of that is related to social impact. So how you treat the clients, how you treat your employees, how much interest you charge, how you make sure that the interest rate is paid, and so on. So it's a huge process. And I once made fun to my partner, who is responsible for dispersing these loans. And I told him, whenever you do a due diligence, you write 40, 50-page report before you decide to really disperse that loan. This is more than what I wrote at my thesis paper back at university. So it's really super workload. But he's right. He's saying he prefers to have the workload before dispersing loans than having to deal with money not being repaid, because then the real workload starts.
Yeah, I can imagine. In that regard, you also mentioned you're not handing anything out for free. So it's not like a donation or anything of that sort. It's like absolutely not that. But why is the loan part the more empowering or the better solution than just donating money through a charity, for example?
Yeah. I mean, I don't want to judge. I don't think it's bad to donate money, but it's not our philosophy. So there is a famous story with the fisherman. So you give a fisherman a fish, and he can eat one lunch or one dinner. If you teach him how to fish, he can feed his whole family, and he can feed himself for a way longer time than just for one dinner. So this is a bit of the philosophy. So there is nothing for free if we give a loan, but they get a lot in return because we help them on their journey.
Got it. And when you then actually invest, I know this is done through your partners, the financial institutions in the respective countries. When you actually then invest in someone, do you invest in existing businesses or ideas, or also just the people that say, hey, I have an idea, but I haven't actually executed anything? What's like the criteria there? Who actually gets the loan?
It's both. So we do the due diligence on the microfinance institution, and we check how they disperse loans, how financial stable they are, what the management is, what the future outlook look like, who are the shareholders of that microfinance institution, how long are they already in the business, and how much assets do they have, and so on. And within that, we also check how they disperse loans. So it's not that we tell them you're not allowed to give to a startup the loan. Yeah. But at the end, we do sample checks before we disperse the loans, and we check how dispersal. We take one out, and we go to this micro entrepreneur and check how is he treated, how much interest rate he's paying, and so on, to see how the bank is or the MFI is really dispersing loans.
Yeah. And these micro entrepreneurs that you're supporting there, they usually have a very hard time, getting loans or credits from traditional banks. Why is that the case? Why is it so difficult for them to get money from traditional financial institutions?
Usually the loans we're giving is $20, $50 to $100, and the people we give loans to live in remote areas most often. Yeah. So, and it's not worse for traditional bank to travel 2 hours to a place and to disperse $50 loans, because whether you give $50 loans or 20,000, the amount of work you have to do, the due diligence, is the same. Yeah. So for them, it's not worth doing it. That's why you have specialized MFIs, microfinance institutions, who are doing that and taking care of the entrepreneurs who fall out of the traditional banking system.
Got it. And, after all, you're still a fund, so you also need to generate returns for your investors. How do you do that? And is that actually justifiable to, ask for interest rate by handing out loans to probably one of the poorest people on planet Earth? Mm-hmm.
Yeah, this is a question I especially got a couple of years ago. Nowadays a bit less, because people get more used to impact investing and microfinance itself. when I started back in 2014, I thought the investors are people who want to save the world, people who walk around in Birkenstock, the foundation employees. These are the ones who invest.
Right.
What I found out is the people who are investing are pension funds, big banks, insurance companies, independent financial advisor, family offices, and so on. Yeah. Why are they investing? Because you get 3 to 4% above LIBOR in US dollar. You have no correlation and low volatility. So that was a perfect match for them because back then, and still is true today, you don't earn any money with typical real estate. The stock market is quite high and quite volatile. Fixed income, you hardly earn any money. So you have to look for alternative, or which is called TINO. There is no alternative. So we actually gave them an alternative. And that was also my sales approach. I didn't go to them and told them, look, invest with us and we're going to save the world. I told them, look, we have an attractive alternative for you as an investor, and you need to make return. As a pension funds, you're obliged to make 2% return to give it back to the people from the pension fund. So that's actually the trigger point to enter in the microfinance space, the big allocations, because we're not targeting the $100, $200 investor. You can invest, but I mean, if you talk with a pension fund, then they invest 5, 10, 20. I just had last month a pension fund who invested 25 million. Of course, that's more attractive to grow as a fund. True. But going back to your question, is it fair to charge loan and how much we charge? I mean, if you look at the value chain, the micro entrepreneurs in US dollar pays 8 to 12% for their loan.
Which is quite high.
It's quite high, especially in these Swiss markets. Terms. Yeah. In Swiss terms. So if you look at the non-collateralized loan in Switzerland to buy a TV or whatever, it's a bit less, but it's in the same range. So, fair point. And you should not forget, we are in remote areas, and we have the banks. We give loans to the MFIs. They have like a couple thousand employees who nothing else than giving loans to the micro entrepreneurs. So, it's time consuming. It's far away. It's cost intense, but the micro entrepreneurs, they pay back more than 99% of their loans. So this is not the risk at microfinance. So. But talking about the interest rate, it's 8 to 12% that they're paying to the microfinance institution, and we get roughly 6.5% into the fund. Yeah. If you deduct the whole total expense ratio, which is management fee and all the other costs, you as an investor end up with 4 to 5% return. Okay. So you see, micro entrepreneurs pay 8 to 12%, you end up with 4 to 5%. There is a lot missing in between, but it's not a Bloomberg and 2 guys who are managing a fund. We have 20 employees, 22 now, and 16 of them do nothing else than dispersing loans to the microfinance institutions. These microfinance institutions have thousands of employees who take care of the micro entrepreneur. So it's really human capital intense, our business model. That's why the economies of scale are a bit less than having a traditional equity fund with, again, 2 managers and the Bloomberg.
Makes sense. Yeah. You mentioned that 99% of the loans actually get paid back. Why is that the case? Because that seems to be an incredibly high number that you probably wouldn't expect that high from the outside.
Yeah. So that's thanks to our selection process. So we make sure that the MFIs, the microfinance institutions, do a thorough due diligence before the dispersal loans. And then the guys who work at the microfinance institution who disperse loans, they're really social connected and they know the micro entrepreneurs. So they go in Cambodia with a tuk-tuk to collect the interest rate and to teach them how to do business. So we're really close, or our partners are really close to the end clients. And it means they're trained in a good way. It's not too high of interest rate that they have to pay. And most often it's collateralized, which means if you want to buy a cow or a sheep as a farmer, then this is actually the collateral for that loan. That makes it a bit cheaper than it would used to be. And don't forget, if you work with loan sharks in these countries, then interest rate of 100% plus is normal. So in these countries with high inflation, 8 to 12% is more than doable and accepted.
Wow. So that's like a really good alternative that you're providing there.
That's the goal of microfinance. Yes, absolutely. Yeah.
What geographies are you actually active in? I know you are active all over the world, basically. But you have any focus, or what geographic areas are you actually active in?
Yeah, so it's actually all the emerging markets except like the 4 or 5 typical ones, which is North Korea. We are not South Sudan, Cuba. These are like the typical ones we are not, or Central African Republic, something like that.
Got it.
But everything else is actually okay. We can disperse loans. we always check how political safe they are, how much interest rate is in general charged, does it make sense, can we bring in money and can we get it out again? So, but our market is all over the emerging markets.
Got it. And what's actually the smallest loan you've ever handed out? You mentioned $20, $50, or $100. What was like the smallest one that you ever did?
Yeah. So, I mean, we disperse loans between 2 to 5 million to the microfinance institutions. Then they go and give the small loans. But there are more than 1 billion people in the world that live off less than $2 a day. And you have to have certain business orientation that we can give you a loan. So I guess the smallest will be $20 plus.
And what's the biggest you did?
That is still considered microfinance. You cannot give more than $20,000-$30,000. Otherwise, it's not considered microfinance anymore.
Makes
it's
sense.
SME finance, which is also a good thing, which can also make sense because not everybody want to be an entrepreneur. Mm-hmm. Some prefer to be employees. And if you have a SME, then that's also good for the economy and the people. Yeah.
One thing that we saw when we did our research, I'm not sure if that's true, so please correct me if I'm wrong, but often your loans are also given out to groups, not only individuals. Why is that the case?
Yeah. It's actually beneficial for both because you only have to do one due diligence, and for the groups it's less interest rate, and they basically guarantee for each other. So, for example, we were once in Kenya, and then you have a hairdresser, you have a cab driver. Cabs in Kenya are the motorbikes, and you just sit behind, and this is a cab. Okay. You have a lady who's selling clothes for babies, and 2 other guys, which I can't remember what they did, but they put themselves together into a group and went to the microfinance institution to get a loan. Yeah. And this is always a good start. And once they prove that they could get a loan by themselves, then they can reapply for another loan. It's actually a good start into the microfinance world.
It's like a multi-step process, if you want to call it that way, right?
Correct. Yeah.
We also saw with the research that the demand for microloans totals about $250 billion US, but currently this is by no means matched by the supply of it. Like, is this actually a good or a bad thing that the demand for the microloans is so much higher than the actual supply? Do you see a big chance to expand your operations, your fund, or is there actually a big challenge that you face there?
Both. So, I mean, if you look at Switzerland as a microfinance hub, there are roughly the whole microfinance market is roughly 15 billion with funds like EMF, like Enabling Microfinance Fund, and a third of that is managed out of Switzerland. So Switzerland is a big hub for that, and we can invest in, or worldwide there are roughly 10,000 so-called microfinance institutions, but attractive for us are roughly 300. This means a track record of a couple of years, a certain amount of assets, external audited accounts, some social performance they have to fulfill, and so on. So our target market is roughly 300. And once, it can also be that they grow out of our market because they become too big for us and they're not willing to give us 6.5%. If they can refinance themselves in the global market for 2-3%, then they don't need us anymore, which is a good thing as well. So our market is capped at, I think you cannot be over a certain size as a fund because otherwise you have to give loans to big banks which are not doing microfinance or just a too small part microfinance. Yeah. And our typical, as I said, loan is 2 to 5 million. These are typical banks with maybe $100, $300, $400, $500 million of assets, and that limits a bit what you can do. But talking again about the example in Cuba, if Cuba opens up, then the first guys who go in are the churches, the foundations, the development banks, Kreditenstalt für Wiederaufbau in Germany, KfW. It's a huge company. They're the first one who go in, who teach them, who helps build up the microfinance institutions, and usually the interest rate that is charged back then is really high. And as more profitable they get, as more experience they have, as more experience they have, then the loan interest rate goes down and the loan size goes up. And after a couple of years, we are willing to go into that market.
Got it. But in that regard, that also seems to be a temporary thing, because ideally you enable them to then, grow bigger and bigger, and then eventually they become too big for you one day.
Exactly, which is a good thing. I mean, Raiffeisen was a microfinance bank. It supported the farmers to buy another cow. Microfinance Switzerland was actually a microfinance market. Bank of America Merrill Lynch was a microfinance bank. They had the earthquake in San Francisco, and then an Italian guy went there and helped the small shops with small loans that they can restart their business. So it's not a new idea, microfinance, and it's actually a good thing. Raiffeisen is not doing microfinance anymore. They do everything else. But this is also a development process which we are happy to see. But there's still enough microfinance institutions around who are wanting us to disperse loans to them. So we don't have an issue yet. We are now 215 million in size. We grow quite heavily within 1 year, from 85 to 250 million, and we don't have an issue dispersing these loans at all.
But do you think that this will become eventually a challenge in the future, that you do need to find other, investments or business models to work on?
Yes, absolutely. I think the size, the way we understand microfinance, the way we manage the fund, or we want to manage the fund going forward, is capped at 700-800 million assets, maybe 1 billion, but more than that, we cannot really grow the way we want to do microfinance. Then we go into the SME part, which is not microfinance anymore, but also interesting, of course. We do have other mandates. One is from the UN, the European Union, and the African Development Bank, which is supporting people in Africa with clean cooking solutions. This is a 50 million mandate we just won, and we will be live next month. Nice. But it's a big challenge to find out another good idea next to microfinance, the next big thing. It's really hard to find. And to be honest, all the companies I look or I observe, they didn't really find the next big thing. They're all, to say it a bit harsh, as one-trick pony, which do have one big fund and then some other small funds on the side. And this is also a challenge for us, because we don't want to have a forest full of bonsai trees. You don't want to have that. You want to have 2 or 3 bigger funds. So, but we are working on some concept, but it's a challenge. It's a challenge to find the next big thing in impact investing.
So we're curious to observe what you're actually cooking up next in that regard.
Before we continue with the show, we would like to introduce you to our new partner, Newco. Newco helps founders navigate the paperwork that starting a company involves. From the first consultation all the way to the commercial register, Newco has helped more than 900 entrepreneurs start their company, and they do so at highly competitive prices. To find out more, visit newco.ch/Swisspreneur. Again, that's newco.ch/Swisspreneur. And now, on with the show.
I also wonder, now we got a very good picture about why microloans are important and how you actually execute them with your partners all over the world. I just wonder, do you have any favorite success story that you actually saw or actually enabled throughout the years?
Mm-hmm. Yeah, I mean, we disperse 100,000 loans, and basically all who repay the loan are success stories. But there are cool stories, like the farmer who got like the $20 loan to buy additional crops or rice or whatever it was, and then he grew bigger. He got another loan, couple $100. He was able to hire new employees, new cows. He added the whole farm, and he grew. Thanks to the credit we give them, he grew to a small and medium enterprise, which is always a nice success factor to see. Or if you see that women are successful with their business and can help bring their kids to school, help them to raise them in a better environment. I mean, these are brilliant stories, and we have thousands of them. We also publish some of them on a monthly basis to give a better feeling for the investors.
Cool. I think this is really entrepreneurship at its best, to really understand the power that entrepreneurship can have in accounting for a person on an individual level.
Absolutely. That's also fulfilling. That's also why we don't have any issues hiring new people, because they know don't want just earn money. They also want to have some impact, which we can give them more than enough. So
absolutely,
that's why we don't really need to look for new investors, for new employees. Good thing we got approached by really good talent.
They find you.
Yeah, in some cases, or referred from other colleagues. But we have offices all over the world. We have one in Pakistan, we have one in Kyrgyzstan, Bishkek, we have one in Nairobi, Kenya, and we have in Ecuador, in Quito. We have offices, and then of course in Zurich and Geneva. But the heart of the company is in the emerging markets. These are the guys who know, who feel the pulse there, who disperse the loans. They are the most relevant employees we have, of course. We are just represent the company towards the investors in Switzerland. But the hard work, the tough disbursement job is done in the emerging markets.
Got it. I would also like to talk about challenges, of launching your own company. The first thing to start, we already heard it, you actually started with the team that you got to know at Blue Orchard. And I just wonder, was that a good or a bad setup for you, working with people that you already knew for probably years, worked with them together? How did that happen? And in retrospect, was that a good setup for you?
Yeah. So roughly half of the employees we currently have, we used to work together at the previous employee. But it came actually by the other direction. So the fund approached us, the Enabling Microfinance Fund, didn't really grow in size and didn't really have a good setup and a good performance. That's why they approached us and asked us if we want to help them to improve that structure. Okay. And I told them we can do, but we need to change a lot. And I would suggest we do our own company and manage the fund. Yeah. And then they kind of liked the idea quite from the start. So we teamed up again with the guys who managed the whole turnaround back at Blue Orchard. Mm-hmm. So they were already up and on fire for that idea. So we didn't really have a challenge to build the core team. Mm-hmm. And we even had employees joining before we even had the company. So they were already willing to join the journey with us, because one of the partners, Chuck, who is responsible for the disbursement of the loans, he's in the business for 20 years. He's like I can say that because it's not myself. He has probably the best track record you can have in dispersing loans in emerging markets. And he is really into details. That's why I could not work for him, because I'm not into details like he is. But he has many colleagues who work with him for 5+ years. So they know how he is and how into detail he is. And it works actually excellent with him.
And you also mentioned that you actually took over the existing EMF fund instead of starting your own. Why was that the right setup? Because you could also just say, hey, we actually start our very own fund and do that from scratch. Why was it better to actually take over an existing fund instead?
So if you start microfinance fund, then you need at least 50 million. And to find a seed investor who's willing to give 50 million, that you have as a reasonable diversification across MFIs and across countries, that's really hard. Yeah. So it was actually an easy decision for us that we work with an existing fund, which has an excellent track record, excellent investors. Hilti family, for example, is involved in Liechtenstein, or the Prince, even with the Medicor Foundation, are involved. So it was way easier for us to do it that way. And it was a perfect combination, because it worked quite nicely together. Otherwise, we could not grow from 85 million to 215 within 1 year as a startup. Yeah. Because usually before institutional investors invest, they want to see 100 million assets, 3-year track record. And we didn't have both of that, and we're still able to grow. Of course, we know the client and investors since a long time, so it was not a big issue for us to contact them again.
So in that regard, it really is the early days from a fund's perspective that are probably the most difficult ones, because the missing track record, the missing funds, basically. Yeah. That's absolutely the biggest challenge.
Yeah, because you start with small tickets, as we call it, with 10, 100,000, but then it's hard to grow. If you want to have the big tickets, like the big pension fund with 10, 20 million tickets or inflow or investments, then you need to have a certain size, because investors don't want to own more than 10 or 20% of the fund.
True.
And we all already had investors who are so big that they say we're not doing anything below 50 million, because it's not reasonable for them to overlook too small investments. So for them, we're not attractive yet. We need to grow much farther that they are willing to invest.
Makes sense. You also mentioned that first you really had to educate the market about impact investing. This certainly changed these days, because now, instead of the challenges that you faced in the early days with having to educate the market, now it seems that almost every financial institution is offering some sort of impact investing solutions. How do you actually differentiate yourself in a more crowded market?
Mm-hmm. I think it's a difference if you do something because you believe it makes sense, or if you do it because you think the investors want to have it. So we really, impact investing at its core is microfinance. You cannot have more impact than with microfinance. And if you do top down and you say, I invest in the SMI minus the bad ones with tobacco or whatever, this is not this is not impact for me. So we don't do the sales approach and telling them, hey, look, we do impact. We come from another side, and most of the investors are already familiar with microfinance, so we don't really. Good thing we did the education a couple of years ago, 7 years ago, but now you don't really have to do too much education anymore. With certain clients you still have, but most of them are already familiar with the topic.
Makes sense. Mm-hmm. And in what way can you actually show people that you are doing the real impact investing? Can I smell that or see the spark in your eyes that you really meet and have the experience? Because if big banks, where there are many in Switzerland, just go to an institutional investor and say, now we also do impact investing, how do you win them over as investors versus the big banks?
Yeah, inherited in our, or implied in our due diligence process is 1/3 of the questions are related to social impact. And we also report that. So we report how many micro entrepreneurs we have, how much is the average loan we disperse, how much is the median loan, how many females we have, how many entrepreneurs are in rural areas. So we report it on a monthly basis. We do once a year, we do a social impact report, which will be produced in the next couple of weeks or months. So where we really show what we do, how we do it, why it has impact. And two other things we do, it's not the idea that I tell you what we do. We want the investors to know by themselves and to see by themselves. Right. Since we cannot travel at the moment, we do webinars. We always have CEOs from MFIs or microfinance institutions joining, and we want investors to ask questions. They can ask all the questions they want. It's not that we filter the question. They can really ask whatever they want. Cool. And what we plan to do as soon as everything opens up is doing field trips, which means we bring the investors along, go to the emerging markets and show them on the ground what we do. They should see with their own eyes what we do. They should ask questions to the micro entrepreneurs. They should ask them how you repay the loan, how much interest rate you pay. So bringing them along on the journey and involving them more is also helping us in showing our what we do. Because it's different if you see it with your own eyes and then if I tell you what we do.
True. Yeah. In that regard, you also have many different stakeholders that you actually have to, make happy. You have 4 partners, you have family offices and also funds in the background that all want to get informed, and some also want to have a say about what's happening. So how do you actually manage the different stakeholders? Because that's quite a few people or organizations to take care of.
It actually sounds more complicated if you say it like that, but it's true. We do have different shareholders. But the good thing is we're all aligned. I mean, if you team up with a new team, then you always have to find your role within that team. And that was done. I mean, we started that process more than 2 years ago. That was already done. I think we all have the same vision, the same mission. We know what we are doing. We know where we want to be in 5 years. The funds are aligned. So that's also a reason why many employees want to join us, because they believe in our mission. They believe in our vision, which is helpful in attracting new talents and to work together with the colleagues. And the good thing is, one colleague and myself, we are responsible for the investor side, and 2 other partners are responsible for the disbursement side. So in a day-to-day job, we have to make sure that whenever money comes in, that we have enough pipeline to disperse the loans to the MFIs, which is sometimes reflecting a bit the higher liquidity, because it needs 3 to 6 months to really disperse from the first contact to dispersing loans, 3 to 6 months. Okay. And sometimes you have big inflows which need 1 or 2 months to be dispersed again. Yep. So we meet of course not meeting, but with Zoom calls, we see each other on a weekly basis. We're in contact with WhatsApp and on a daily basis. Of course, that works well.
And how long does it actually take to then generate a payout? Of course, you get your interest rate on a regular basis, but how long do the loans usually last?
Yeah. So when we disperse loans, we give them a loan for 3 years, but we want to have repaid it for 1/3 after 1 year, the second third after 2 years. So it's always it's so-called amortizing loans, which is good for us for liquidity-wise, because we can either renew the loan or give a new loan to another MFIs or repay it to the investors if they want to have the money back from the fund, because you really have to take care that it's not a liquidity mismatch, because we offer the investors liquidity from 1 to 3 months when they redeem, and we disperse loans for 3 months for 3 years. Yeah. So you have to manage that liquidity. That's why we have always 10% cash, maybe 25% within the next 6-7 months is going to be repaid into the fund. And we also have a credit line from our custodian bank.
Got it. And one last challenge that I want to address is, of course, COVID. It hit all over the world, obviously also in your active markets. But surprisingly, in the prep call, you mentioned to me that these ecosystems, they are way more resilient because there's always a crisis. So what impact did COVID actually have on your business?
Yeah, it's actually funny. When I started after university at Julius Baer, there was a Lehman Brothers crisis, and now when we started with Enabling Qapital, there was a COVID crisis. There is no chance that you could foresee that, of course.
So whenever you will start a next company, it will be the third crisis, right?
Absolutely. How we address that challenge. So the good thing is we received most of the fund in cash. So we could disperse loans in a post-COVID shock environment. So we could see how politicians react, which country are hit harder than others. And that's why also we disperse loans not in urban areas, but more in rural areas, because they tend to be less affected by the COVID crisis. Yeah. And if you think about the emerging markets, crisis is absolutely normal for them. They have everyday crisis. They have to struggle every day. They have floods. They have a dry season. They have SARS or whatever the illnesses are, or the viruses. So it's not, they're way more resilient than we are in the Western world. And the good thing is actually that it's a young population. And we learned that young population are less affected by the COVID crisis. It is a challenge for us. Of course, we have to take measurements to take care of that. But I think I prefer to be in emerging markets than in Western parts with that crisis, to be honest.
That's very interesting for me, because when you mentioned that, they regularly have crises that they face, it makes them way more resilient. They pay back 99% of the loans. Does that resilience also make them better entrepreneurs?
Yes, 100%. Because as an entrepreneur, you have to get used to crises. There is always something unexpected happening, and you have to struggle through some difficulties, and they're used to that, so they're way more prepared to become an entrepreneur, yes.
Here in Switzerland, we are pretty comfortable, right? We have good jobs, well-paying jobs. We are probably not that resilient because there are not that many crises here that we face. So what can we actually learn from the countries that you operate in, from the more resilient entrepreneurs from abroad? Any learnings or lessons that we can apply here to our entrepreneurial lives?
Yeah, I think being a bit more relaxed and not thinking too much about the future, think a bit more about now than what could eventually happen in the future, because you can anyways not manage the future. You have to be prepared for the worst, but expect the best, of course. But I think we can learn a lot from resilient and the mindset, I would say.
In what way, the mindset?
Yeah, dealing with difficulties and struggles, and not just getting nervous if something bad happens, or getting into depression if something not the way you want it to be. Act more, take the situation as it is and make the best out of it, I would say. This is probably what we can learn.
So to a certain degree, don't think about the perfect plan, but be more adaptable and just course correct as you go, basically.
Absolutely, yeah. Fully agree. Yeah, fully agree.
Nice. Let's also talk about your current success and the future plans. You mentioned you hit the $215 million assets under management. That's a steep growth. I remember still reading some research where you said the goal is to go to 100, and now you actually more than doubled that. So congratulations on that milestone.
Thank you.
What's next for you and Enabling Qapital? What do you have planned?
Yeah, I mean, we still want to do our mission, which is moving money to meaning. We will want to continue that. Once we grow, we need to hire more staff. And that's always a challenging. As I said, we have offices all over the world. The goal is to grow with that fund within the next couple of years to 800 million to $1 billion. And also to find other good investments. We want to work together with DFI, Development Finance Institution, like World Bank or African Development Bank, KfW, and so on. But we also want to have other funds that we could grow to a reasonable size and do impact, of course.
And some friends of ours, Cedric Waldburger, for example, he's very bullish on the decentralized finance topics. In what way do cryptocurrencies and other decentralized finance solutions play a role in your future?
Two things. So one, we actually are looking into, one investor want to have tokenized, they want to invest with tokens into our fund, which you can of course do if it's regulatory doable. Sure. But the other interesting thing is when it goes to technological advance, or they're way more advanced than we are in emerging markets. For example, this Twint or this Apple Pay, which we now think it's super, super cool and new. It's in Africa, in Kenya. They do that since years, since more than 10 years. It's with M-Pesa, and more than half of the turnover in a yearly basis is done via M-Pesa, and you can pay everything. And it's not with the Apple iPhones or the Samsungs we have. It's with the old cell phones. So repayment is done with the cell phone, interest rate payment, and so on. Everything is done with that. And also it helps us, the technical improvements help us to make it cheaper. Because if you don't have to do all the paperwork, if you do it electronically, you go to the field, to the farmer with, I don't know, with an iPad or whatever you have, mobile device, and you can fill out everything you need, and you can show him what it means. It's way easier. So it helps us to bring down the cost of the dispersing of these loans.
Great. So we also will see some innovation there, or some more innovation.
Absolutely. Yeah. So fintech is a big thing there. It was actually born out of or it was born because they didn't have any other solutions to do. So actually, in a bad situation, made something good out of it.
Right.
Because we didn't really need M-Pesa in Switzerland or Twint. It helps, but we had all the banking system before. But they basically jumped the banking system and get directly to the mobile payments.
For me, this is again really entrepreneurship at its best. Mm-hmm. You have a need, there's a big problem, and then you need a solution, and that's where entrepreneurship comes in.
Yes, absolutely.
It's beautiful. Now, we talked about your real estate investments. We deeply talked about microloans. And of course, we also want to learn more about your startup investments. Mm-hmm. You mentioned it in the beginning. You are active as a startup investor since a few years. For example, you invested in Amorana, which probably turned out pretty well for you from the investor perspective. Why did you actually decide to invest in startups in the first place?
Yeah, I like to be surrounded by interesting people. So I think you as a person make up the average of 5 people you spend most time with. And if I talk with investors, I mean, most of them are, or I would say all of them are way smarter than me, more hardworking than me, and I can learn a lot from them. And whenever I invested in startups, I think the success factor is timing, team, and then idea. Timing is hard to judge, but team you can judge. Right. And I remember when Alan and Lucas approached me with Amorana, I didn't think that it's the best idea I ever heard, but I like these 2 guys, and they're a super complement to each other, and it obviously turned out quite nicely, the investment. So, but I also invested in startups that went bankrupt. So you always have the success stories and the failures next to it.
How do you actually deal with these losses? Because that's obviously part of being a startup investor, but I can imagine when you actually go through a loss and the company goes bankrupt, that this still is or can be a bigger challenge emotionally than you first thought, because you're actually losing money.
Yeah, it's actually a bad thing. As humankind is always more focused on the bad thing than on the good thing, which is true. But the funny thing is that investment that went bankrupt, he's still a friend of mine. He's a good friend of mine, and I just rent. We want to change an apartment, and I rent apartments from him. So I'm still in contact with him. I mean, at the end, it's risky money. It is. Right. You do 10 investments, 7 don't work out, 2 okayish, and 1 hopefully takes off. So that's part of the game.
What's important there, because I can imagine you can end an investment or end a company in a good way, but also in a bad way. So you're still friends, you're still in touch. What did that entrepreneur do particularly well to make a good ending possible?
It's easy to answer. It's communication. It's always communication. The most issue happens, lack of communication. So he came to me when the company was in struggle because the core team left, and he told me everything in a transparent way. So, yeah, I think he made an excellent communication. That's why I didn't. I mean, of course, I tease him with that loss. But it's also important if you invest, don't invest all the money into one startup. I always invest smaller amounts. That I can diversify my investments. Never big money, and that I need for living.
Sure. And why do you actually decide to invest alone and not through a fund or a business angel club?
Because I like to be involved more closely to the ideas. I like the exchange with the investors, and I want to be the decision maker, not the decision taker. Mm-hmm. And most often you have lockup periods. But I mean, I am invested in one fund actually from Partners Group. I just invested in a fund which I think they do a good business. It's super expensive, but I think they do a good business. But I like to have the exchange with these guys. That's why I also joined the entrepreneur organization just recently. I want to hear the stories from them. I want to get first-hand information.
That makes sense.
Yeah.
And, you mentioned team is the most important part that you focus on these early stage investments. But I also wonder, are there any trends or topics that you are especially bullish on for the future, for future investments also?
That's funny because I built up trust in the Amarana founders, and they approach me with new ideas. And that's why I'm quite fast with entering new ideas with them. For example, we just invested in Definity, the internet computer, thanks to an investment idea of one of these guys. Mm-hmm. So, and I want to force myself to look into these topics more. That's why I want to invest, because sometimes it's too complicated for me and I want to focus and learn more about what it is. But more trends that I invest, no, I just, whenever something interesting comes up to me, then...
The trends find you, basically. To a certain degree.
To a certain degree, yes.
That's
absolutely.
a good position.
But I mean, I'm not interested because I do really small tickets. I'm not really interested in VC or whatever. I do like more Me Too investments.
Right.
If I join others who do it as well.
Makes sense. So now to wrap up, we always ask our guests about their favorite resources and gadgets. So do you have any resources like blogs, podcasts, or other things that you can share with our audience or recommend to our listeners?
Yes. I just became second-time father a couple months ago, actually in last September, so I don't really have time to read. But I like to listen to podcasts whenever I go running or so. So I have... One is actually The Happiness Lab from Dr. Laurie Sanders, which I like to listen to a lot, which also talks about the philosophy of ancient Greece. Philosophy is super interesting.
Nice.
What I like as well is Business Wars from Wondery. You might have heard of that. The fight Pepsi against Coke and stuff. Yeah. Super interesting as well. And I like to listen to stuff from Naval Ravikant, for example. And one guy who can explain complicated stuff super easy is Yuval Noah Harari. I mean, he's brilliant. He's brilliant. I love listening to him. Cool. But talking about gadgets, I prefer having less gadgets than because I spend so much time. I waste so much time with my cell phone, just looking at, I don't know, browsing stupid things. I prefer less. I would actually prefer a handy without a screen, the old school Nokia again, where you can only make phone calls.
It's cool. You don't have to charge it for days.
Exactly. That's true. That's why many micro entrepreneurs actually still have these old phones, because they work excellent in these markets. And again, you don't have to charge it, because charging phones in remote areas is also a challenge. You need to have like solar panels or one shop who is charging that you can recharge your phone.
And now for the very last part, we have some rapid fire questions for you. Mm-hmm. I either give you a choice of 2 or 3 options or a short question, and you can answer in 1 sentence. Are you ready?
Yeah.
Are you a Micro or a Coop kid?
Actually, as a kid, I went more often to the Micro, but now I prefer Coop.
Why?
It's more convenient. I like what they have. I get used to their offerings, and it's closer.
Got it. What's your favorite investment?
Enabling Qapital, of course.
And where do you go to think?
I like to go to the mountains. My parents have an apartment in Engelberg, so I like to go there to be a bit remote.
Big impact with no return on investment, or small impact with big return on investment?
Both.
You had to say it. That's clear. Because that's actually what you're doing.
Exactly.
How many hours of sleep did you get last night?
Again, I just became second-time father, so it's a bit challenging. But I tried to go to bed early, so I got, what was it last night? Was still 7 to 8 hours with some breaks in between to give a shopping to my little boy.
That's a pretty good number, I would say, for that phase of your life.
Yeah.
Crypto, stocks, or microloans?
I think a combination of all 3, I would say.
Yeah. And if you had to make one other choice, startup or microloan investments?
Again, both. I think it makes sense to be involved in both.
Perfect. So these were all my questions for today, Roger. Thank you so much for stopping by and for taking the time. It was a pleasure talking to you, and we wish you all the best for the future with your family, your growing family, and of course also enabling Qapital.
Thanks a lot. Thanks.
The This episode was brought to you by Swisspreneur's main partner, Clara Business, the digital all-in-one solution for small businesses. Managing internal processes manually and on paper wastes an incredible amount of time. That's why Clara digitizes everything, allowing you to focus on what really matters, your core business. Go to clara.ch to find out how your business administration can be simpler, faster, and more efficient. Again, that's clara.ch.